All right, let's dive right in. Today, we are talking about one of the biggest stories in finance. Maybe the biggest. It's this massive collision of two completely different worlds. You've got Wall Street, right? The old guard, centuries of history. And then you have crypto, decentralized, chaotic, and moving at light speed. For years, they've kind of been dancing around each other, but now they're starting to converge. The real question is, who's coming out on top? And the answer is, well, it's not what you think.
And let's be real, the old guard is not exactly throwing a welcome party. Just take a look at this quote from Vanguard, one of the biggest money managers on the entire planet. They're still calling Bitcoin a speculative digital toy. That single quote tells you everything you need to know about the skepticism that's still baked into the highest levels of traditional finance. But is it really just a toy? Because while some of these giants are waving it off, others are making some pretty serious moves behind the scenes. And those moves? Well, they suggest a much bigger story is playing out here. A story that goes way beyond just speculation.
So first up, let's look at how Wall Street itself is literally building the bridges to the crypto world. And I'm not talking about theories or white papers. This is happening in the actual plumbing, the guts of the financial system.
Check this out. Interactive Brokers, a huge, totally mainstream brokerage firm, is doing something that would have been unthinkable a few years ago. They're letting you fund your account directly with crypto stablecoins. You know, those digital tokens that are pegged to the dollar? Think about what that means. The line between your crypto wallet and your traditional brokerage account is starting to get really blurry. And it's not just about us, the individual investors. The big money, the institutions, they're getting the tools they need too. A platform called Fireblocks, which is a huge deal for enterprise-grade crypto services, is now integrating the Cardano network. This is so important because it's basically creating a super simple on-ramp for banks and major fintech companies to plug into this technology at a massive scale.
So let's just connect the dots here, because this is the key. On one side, you have Interactive Brokers making it so your digital wallet and your bank account practically become the same thing. And on the other, you've got Fireblocks, literally laying down the pipes so the biggest financial players can hook right into these crypto networks. This isn't just talk, you see. This is real action.
Okay, so building the tech bridges is one thing. But for crypto to really, truly merge with Wall Street, it needs that official stamp of approval. Government legitimacy. So is it actually making that jump? Is it going from this kind of fringe outlaw asset to a regulated institutional player?
And to get that, you gotta know this term, a National Trust Bank Charter. It sounds boring, I know, but trust me, it's a huge deal. This is basically a federal license from a group called the OCC. Getting one of these means the US government is saying, yep, you're legit, you can hold and manage people's money across the whole country, just like a traditional old-school bank.
And just look at who's been getting the green light. The OCC has started handing out these conditional charters to some of the heaviest hitters in the crypto space. We're talking about Ripple, BitGo, Paxos, even the digital asset arm of Fidelity. This is the US government directly pulling major crypto firms into the traditional banking system.
But, and this is a really big but, this is where the whole picture gets super confusing. Because on the one hand, you have these very specific, very powerful green lights from regulators for individual companies, but then you zoom out and look at the bigger picture in Washington, and all you see is red tape. The signal from Capitol Hill is pretty clear. Don't hold your breath for any big, comprehensive new law to govern the entire crypto market. It's just not happening right now.
And if you want to put a number on that uncertainty, just look at this. Prediction markets, places like Polymarket, are giving it a 7% chance that any major crypto legislation passes this year. 7%. That shows you just how massive the disconnect is between these specific company approvals and any kind of overall policy.
So what on earth is going on? To really understand why Washington is dragging its feet on crypto, you have to realize it's part of a much bigger pattern of confusion and economic uncertainty that's got everyone's attention.
I mean, just look at the Federal Reserve. You've got members like Austin Goolsbee coming out and saying he's on the dovish side, that he's expecting more rate cuts down the road. Basically, he's signaling, hey, maybe we need to ease up on the economy.
But then you hear from someone like former Treasury Secretary Hank Paulson, and he's pointing at something completely different. He's arguing that it's stuff like trade tariffs that are really driving inflation. So, you see, even the folks in charge of the entire economy can't seem to agree on what the actual problem is, let alone how to fix it.
And this fight between innovation and bureaucracy, it goes way beyond crypto. We're seeing the exact same thing in the tech world. You have states literally suing the federal government over these new visa fees that could choke off the flow of top talent. So the gridlock crypto's facing isn't some special case, it's just one symptom of this much bigger tension between new technology and old rules.
Okay, so to recap, Wall Street is building the bridges. Washington is sending, let's call them mixed signals. But this final piece of the puzzle, this is the most surprising one of all. It turns out crypto isn't just trying to get a seat at the table with the old system. In some cases, it's trying to buy the whole table.
So, what would be the ultimate power move? What do you do if you're a new money industry and you want to prove to the entire world that you are here to stay?
You do this. Tether, the company behind the biggest stablecoin in the world, has apparently put in a bid to buy the Juventus Football Club. We are talking about a legendary 100-year-old sports team with a global brand. Think about that. This isn't about getting a banking license anymore. This is a crypto-native company trying to straight up buy a piece of the cultural establishment.
Let's just put all of this into perspective for a second. 15 years ago, Satoshi Nakamoto, the anonymous creator of Bitcoin, wrote a final forum post and just vanished. The whole thing was just some weird niche experiment for cypherpunks. Today, it's a multi-trillion-dollar global asset class that's getting wired into Wall Street and is trying to buy legacy brands. So, what does that mean for tomorrow?
And that really is the ultimate question, isn't it? Are we just watching a merger, where crypto becomes just another asset on Wall Street's spreadsheet, or is this more like a takeover, where this new tech and new money tries to buy and completely remake the old world? Or is it something else entirely, the start of a completely new game, with a rulebook that hasn't even been written yet? The one thing to take away from all this is that the answer is still very, very much up for grabs.